This is Short Hammer. It is the 17th of March, 2020, and this is Trading Zones. I'm taking a look at Amazon, and the market has been taking a beating. And one of the things you want to keep an eye out for is for companies to start warning that they're going to have a really, really rough quarter and that they might miss their earnings. So keep an eye out for that. There are a lot of setups out there and a lot of fear. So be careful. And if you're getting into a position, make sure you have an exit strategy, you have a stop, you have a profit target. Don't just get in because it's down. Have a greater thesis than, hey, this is down, I'm just gonna buy. Because a lot of people bought the last 2 Fridays and they got robbed. So be very careful on your setups and what you're looking for. And if you can, make sure to hedge your positions. So looking at Amazon here, we see that Amazon, I believe it was July earnings, which is here. We did see a dip, and the buyers stepped in on this around 1748. We see the line here, and we pushed back up to the 1830-ish area. It says 1850s, but really the 1830s was the area that was the top of this channel, and we stayed within this channel for quite some time. We did dip a bit right around the 1705 area, pop back up, but we're really in this channel till about December. When we got above it, we held, and we really made a strong move to the upside. Amazon right now is below that. So Amazon looks like we closed right around, this says 1690s. That should, let's see. Look at the 4 hour here so I could see this specifically. So we closed right around, it's like 17, no, we're at 1740, so we closed up here. So if I'm watching Amazon, what I'm watching is this area here. Look at these candles, these 4 hour candles, how it's really struggled to gain traction above what was the bottom of the channel, those 1740s. So what I would want to see on Amazon is a push through the 1740s, a backtest hold, and a higher high above the 1780s, and a push up here to close this gap into the 1800s. But even if you get that, you really want to watch those 1830s, and you want to leg through that and a push to the 1850s. You really want a strong push if you're going to be long in Amazon. Now, to the downside, what you want to watch on Amazon is these. It's like it's the 1620s. That's pretty low. So let's see when was the last time we were there. So we had a flare down on about October. And before that, we had all these lower levels that we see here. These are down around the 1590s. We see, look at all this candle structure here. So that's the level that we could go to on Amazon, the 1590s, and below that, the 1520s. Could we go lower? It's possible. What would I be watching for on Amazon tomorrow? See if all this stimulus and rate cut news can catch hold. So I would not be jumping in at the open and just taking it long or short. Just see where we are, because we've been up and down, and we're right below this supply area, right around those upper 1740s. And there's an area above that right around the 1760s. I think about 1762 that we need to get through. But if we're above that and we're looking bullish, I would be long. And if we push above the 1740s into the 1762s and you see some upper wicks, don't hesitate to fade that back down to the upper 1740s, 1740s to 17, watch the 1756s too, but really the 1740s. And if we hold, then take that long back into the 1762 area. just so I'd sort of watch this little ping pong area here, to see if you can catch a play intraday. If we get over those 1760s and you see bullish candlestick formations and increasing volume, then we may have a chance. But just be careful. You see all these levels here, the 1590s, 1520s, below that 1456, and above here we have the 1740s, 1705 right here, above 1762-ish, and above that the 1780s, and then we really start to squeeze up into the bad neighborhood of the 1792s, 1798s, and 1805s. So keep an eye on this, but just be aware where we are, and whatever position size you usually take, don't hesitate to go a little bit lighter than usual. Let's move on. Next up is Netflix. If we remember on Netflix, what we were watching for was a break and hold of 384s. That didn't happen. See these upper wicks? And the weakness there really goes back to, I'd say 2018 was the last time we really saw any strength above those 384s. And we were hoping for a Tesla-like move where news came out and it was really strong and bullish above those 384s. Didn't happen. We were watching this long-term trend. I believe this is from September. From September. And we were going to see if we were going to get a buy here. We did not. The way through, support or resistance, as BB2 always says, is a gap. And we gap down. So what are we watching for here? A potential back test of this trend line up around the 343s is possible at some point. See if we can get through that. But right now, we're at this point where we're between, it says 298. Let me see exactly where we close. Look at the 4-hour. So we're right here below this 306 area. So what would I be watching for? I would be watching, do we hold the 292s? If so, can we get over the 306s and get a squeeze into 317s? We've been seeing some pretty strong gaps in either direction. So what I want you to do is pay attention to the zones immediately to the north and south of where we closed yesterday. So we have the 317s. We have the what's this here? 330s, the 335s, and the 343s. Below that, and remember we have a trend line right here. Below that, we have the 292s, 282s, and 264s. Keep an eye on these areas. Can we go lower? Maybe. But I didn't even pop lines in here down that far. Not saying it's not possible, but it's not probable. We'll see, how much deeper we can go without a, nice little pop to the upside. But watch these levels as you get into your positions tomorrow to see if you see bullish candlestick formations above any of these supply or demand areas, and if you see corresponding volume to take us to the upside or to the downside. Next up, NVIDIA. Now, where are we on NVIDIA? Take a peek at the daily. Hopefully I'm not in here too close. Let's zoom out a little bit if we can. So on NVIDIA, we see we have a long-term trend here going back to August. And we were riding this trend line all the way up, hitting our levels, gap down through, tried to back test, didn't work out. Okay, so what do we watch for NVIDIA? The trend is up around 247, 248-ish. Let's drop this to a 4-hour. Boom. So on the 4-hour, we're right around that 205 area. So right above the 200 demand area is what it will be right now. So what we want to see is, do we see a squeeze or a gap into the 217s? So the immediate area to the upside, 217s, 221s, 230s, and potentially the 238s. Because of how we gap up or gap down, you kind of want to have these lines headed all the way up. 247s are potentially there. To the lower downside, we have 181s, then 157s. We'll see where we open, but you see these lines, and you can play them as supply or demand depending where the candle is. If the candle is headed into it, it's a potential supply area. If the candle is going down to it, it's a potential demand area. So if we open up here around the 234 area, look to see if we see a slight pullback into the 230 hole. And if buyers step in and give us a little push to the upside into the next supply area. Let's take a peek at Apple. See on the 4-hour, Apple right around 250. So we are above the 236. So let's see the immediate areas on Apple. To the downside, we have 236, 229, 215. Above, we have 256, 267, 271, 277, and 284, giving you all these in case we gap. Let's check out the daily. On the daily chart, we do have a trend line here up around that 267 area. This is a longer term trend. See if we get over that. What you really want to be careful of is with Apple, there's a lot of negative news. I believe they have already guided down. Lots of stores are shuttered, so sales may be challenged. So be careful if you're planning to build a position in Apple because of how beaten down it is headed into earnings. You really want to be careful, just to watch the news and whatever stimulus packages come out, and if we pop, ride the wave, but be careful of expecting another bull run at this point. So just trade carefully. Watch your six. Next up, we have CMG. Now, CMG on the daily, I don't have a trend here, but let's take a peek at that 4-hour. See how that looks. Snap beans, missed my entry on the futures, but that's fine. What we see is we held the 526s. Buyer stepped in, pushed us up. We can see if we're going to get a run to the 607s. Above that, we have the 656s, 717s, and 745s. This is almost downtrending, it looks like. Let me see. Just on the 4-hour. This is from February. Let's see what we got here. See if this will almost looks like it's downtrending. But I don't like the way that, I wouldn't draw it that way because I draw it across here. I don't like the way that looks. So I don't like that. Remove. But it is downtrending, and maybe it looks better on the daily chart. I like my things to align crisply, but keep an eye on these levels. The restaurants are closed, and the only food would be if you're ordering and they're delivering. And I've ordered a few things from Chipotle lately, but not sure if that will be enough to keep those earnings numbers up. So I'll be careful of getting too heavy in Chipotle, just because, well, there are two schools of thought, right? So no one knows exactly how long the coronavirus situation may last. So it may be a month, 2 months, it may be 6 months, 7 months, right? So how long will the social distancing doctrine last? Let's say, what if that lasts all of this quarter and some of next quarter? well, then you would see a spillover into the next earnings. So if you were purchasing something like a CMG or one of these companies uh, this quarter in expectation that, hey, even if they miss the upcoming earnings, the next earnings, they may be recovering. And I got a great dip buy on this. Be careful because this earnings could be bad and the next earnings could be bad also. Now, some of these companies are going to receive stimulus slash bailout money and favorable terms as far as refinancing their corporate debt. So just keep an eye on the news and be very specific to the company and sort of like I'll circle back when I look at another company in a moment. But just be careful when you get in on your thesis because what's going on with the coronavirus is something that for me I don't think too many traders have seen and traded in a market where we had almost a decade of a bull run and then had a an epic crash and drawdown based on non-economic um, a non-economic catalyst, but a non-economic catalyst that sort of revealed the underlying economic weakness, in my opinion. Okay, CMG. Now let's take a look at Goose. Now our Goose is sort of consolidating here. I kind of like Goose. I think Goose does have some upside from here. I'm going to keep an eye on Goose, but to the upside, we have the 1570s, we have the 2037s, and the 2230s. Um, I like Goose as a company. They do have significant China exposure. I do remember when there were protests in China and people were not um, going to or soliciting the Goose company that they tanked. Like they were dropping, they were selling, and it was definitely a significant drawdown that they had then. So, being that there are quarantine and store closure situations in China, I'm sure that that's also going to negatively affect them, and also those that are around the world in areas where they're quarantined. That is negatively affecting the company. But the question you had to ask yourself is Goose one of those brands, those legacy brands that's going to be around for a while? And can they weather the storm? And if they can't weather the storm, is there a company that would acquire Goose? So definitely keep an eye on Goose. I like where it is right now. And I might be looking to open a few positions in this soon, just as we get more information on the coronavirus and cases and when those numbers start to decrease or when the market starts to ignore the uh, the cases of or new cases of coronavirus and sort of like one of those things when it becomes bad news is good news. Like we've watched us miss on economic data and the market pop, right? Because all of a sudden bad news became good news. At some point, the market will switch, and no matter what news comes out, it's going to be considered good news, and we're going to keep going up. But I don't know if we're at that point yet because I don't think that we've hit the peak on the current crisis that we're dealing with right now with the coronavirus, in my opinion. Let's take a look at Intel. Intel is interesting, right around this 45.80. So below, we have 42.88. Below that, we have 38.28. Above, we have 47.27 and 49.16, then 51.11. Before we had this drawdown, remember that Intel did beat on earnings, and they were kind of bullish headed into earnings. And even after earnings, they were kind of holding on to some of those gains as if they may take another leg up. But we just happened to hit a rough patch, and this selling came in. So keep an eye on Intel to see if buyers, it hits a point where buyers start to feel that the value, should I say investors feel that the value is there and they want to start scaling into this. And I don't believe it's happened yet, but keep an eye on Intel. Dollar Tree. Oh my gosh, it's getting hammered. Um, so Dollar Tree, this was a buy zone that I did buy on, and definitely caught some of this upside. But right now we're rolling. That's a little back test here. I do like Dollar Tree. I think when times are hard, people go to stores like Dollar Tree to save money. You get a lot for a little. So keep an eye on the 65 area. Below that's the 60-15. Then I have us all the way down around the 49s. Above 7280s, 79s. Then these looks to be about the 84, 84-ish, 83-ish area. But I do like Dollar Tree. I am not in Dollar Tree yet, but I'll be waiting and sort of lurking in the shadows on Dollar Tree and waiting for an opportunity to get a good entry on this for some upside. Even if there is a recession, people are going to be going to Dollar Tree. So taking a look at CI, this has been a nice drop. Let's see on the 4-hour. It is trying to hold above this 147 area. What we want to see is a buyback through the 157s. 163s. I would need to draw some lines lower. But if I remember correctly, let's go to the daily chart. I really do believe that, oh yeah, this is a buy area on CI. This is where you get into CI. It may give you a little bit more of a dip, a few more points, but these 140s is a good area to get in on CI historically. Not saying it may not go lower, but this is not a bad place to begin a position, but don't be stubborn. If it starts to roll on you, get the heck out. And get the heck out, meaning if you give this thing, 5 points or so, I do like CI. And I will actually be looking to get a position on CI headed into earnings. What's going on now should not negatively affect hospitals, in my opinion. And I may be wrong on that, but I don't think that people at hospitals are not going into work because of the coronavirus. People at restaurants, yes, they may not be going into work. If you drive Uber, you may not have as much work, or Lyft, not as much work, or airlines, not as much work based on the coronavirus. But right now, I would feel that that hospitals are just looking for as many nurses and doctors and help as much help as they can, qualified help as they can. So just because they may be overburdened. So I think that healthcare should recover. Just maybe faster than some other areas. Let's take a peek at Microsoft. Microsoft is down here right above the 131s. Let's take a look at the 4-hour. So we close around 139. So immediate areas below 131, below that 120. Then below that 115, above we have 141.50s, 147.53, 152s. Look at that candle structure. That'd be a good place to push into. So those are the immediate areas to watch on Microsoft. This bad boy could gap as things have been doing. So watch the 156s and the 160s also. I'm neither bullish or bearish on the market. I wait for it to open, and then I see where we're trending, and based on that, I take a position. But I do use these longer time frame levels, supply and demand levels, as I won't say measuring, but as like a map or a guideline to help me get good entries on my intraday. Take a peek at SPY. Let's see, where are we? SPY. Oh, look at this. It's hanging around this 239.82. So I would keep an eye on SPY. I have lines here: 239.82, 233, and then 228. Above, we have 250. Then we have this 260 area. Then above that, 273. So I would keep an eye on SPY. Those are the immediate levels. If we gap, watch the 280s. Let's see, what's this exactly? 280s, then 286. Below that 228, 212 is possible. Wouldn't say probable. Then the 182 area on the SPY. I wonder if I drew lines on knock. I may not have. No lines on knock. Oh man, I have to definitely line that up, because I do think that defense is going to recover, probably relatively quickly, because they don't really have a consumer aspect. Ignore that alarm. But they don't really have a consumer aspect, a consumer facing aspect that would struggle. So I do see defense bouncing back relatively quickly also, and I could be wrong on that, but I will be watching defense, and that's one of the sectors that I'll be looking to get into as things begin to shake out. I'm definitely keeping an eye on defense and an eye on any bills that may be funneling money to defense. Okay, so if you like this video, tap the like button. And if you'd like to receive more content like this, please do not hesitate to subscribe to our YouTube channel, Power of Pivots, where you can get content from me, and I should say, content from Elisa, as she shares the ways that she utilizes her Power of Pivot script to find great intraday entries and also swing plays. Thank you so much for your time. Prayers go out to your families, and safe trading.